a minute. We got
I just started recording, just so everyone can see
now
it.
you don't know who's going to sign up, so we don't know if 23 is the right whether more.
It
More
keeps
people
going up. 23, 24. It'll keep going up. People
Good.
do
Okay,
this late, so
I'll give the basic intro so that nobody who really cares will miss anything really important. Okay.
wait, hold on a second, Jay. One thing real quick. So I'm going to have you do your presentation, and
Yeah.
then I will then you let me know when you're finished. I'll tell people how to pose questions for you without having a bunch of people talking, okay?
Okay.
So just tell me when you're done.
Good point. I'll mention about questions for the moment.
Yep.
Todd's gonna mute everybody while I do the presentation until I keel over, take a deep breath, whatever, and decide I need some air, which isn't going to happen because I've done this for an hour and a half nonstop on presentations a bunch of times. It's what you get paid for. You practice your entire life as a lawyer to do that. The reason for that is that it's too easy to get diverted. Normally, I love questions, and if I get 3, it's great. But on this topic, it's just a flood. I mean, I got questions for my presentation for lawyers tomorrow. One guy emailed me 18 questions. So just be patient. We'll get to it. So what happened is, let's see, today is Wednesday. It's hard to say when you're working 7 days a week and you're working at home. So who knows what day of the week it is. Last Friday, Congress adopted a statute, and the Orange Hellbeast, sorry, I didn't really say that, signed it. The important thing to know on that is that there were dramatic changes in the last 48 hours. It ended up being 883 pages. The version we had 2 days earlier was about 630 pages. That's an overstatement because of the way they print statutes. They're really narrow with huge margins and big fat spaces so that they can actually mark them up. It's referred to as a markup, and they just write in the print. It's really only about 230 pages, which is, I think, what I cut it down to. But if anybody told you what was in the law more than prior to, let's say, last Thursday, forget it. There are dramatic changes, and if you want to look at the text, be careful and make sure that you're looking at the real final text, which is available all sorts of places. Now, what you're going to look at is my PowerPoint presentation that I'm going to deliver tomorrow to the New York State Bar Association. So it's going to have some references to the fact that the viewers are lawyers, but they're really not, as I point out here, and that's going to be in tomorrow, lawyers are not special here. Law firms borrowing money, and a lot of them are borrowing money. There are a lot of people who have called me who are basically having nervous breakdowns, as are a lot of other small businessmen, because they've spent 30, 40 years building up their livelihood, and it's over. So they're not special. There are a couple of special categories. The biggest special category really is only hotels, because hotels are a little peculiar because they have different locations. And if you have a hotel with 5 locations, you can easily blow above the maximum number of employees. So there is a single location rule, which I believe applies only to hotels. There are special rules for solo practitioners, solo, was it, I think, was it Brian? Someone sent me an email about, if I'm a solo, can I do this? I don't think I can. And the answer is, yeah, but maybe you can. Independent contractors who are really essentially employees, but their employer is cheating the tax department. There's all sorts of different people who, because of the quirkies in the law, can participate. So now I'm going to get to substance. Let's see, except that I have to figure out how to click. Why isn't it clicking through? There we go. Sorry. Here's the basic outline of the questions you have to ask or things you have to learn about. First, do I qualify for the program? Second, how much of a loan do I get? Third, what are the loan terms? Fourth, you can say, do I have to pay it back, or what's this about forgiveness? Fifth, and this is very important because the tax consequences of forgiveness are very positive. What are the legal consequences of forgiveness? And then there's sort of the miscellaneous stuff, which is interesting and we'll talk about, but is not really at the core of the thing. My opinion, just to get you to the bottom line, is that if you qualify, you should apply because it's a no-lose situation. Hopefully, by the time I'm finished, you'll figure out why. But if you haven't, we'll talk about why. Um, some people disagree. A couple of my partners disagree. They're dumb. By the way, please look. Is Asher on here? One of my partners is an active berserker, and he's gonna kill me if I said that, but it's true. Okay, do I qualify?
I'm here, Jay. Hi.
Oh, good. Asher's going to be there. Okay. So just tell people that they're really, really dumb if they don't do this.
I don't have to, Jay, because Jay, you always tell people that they're dumb. I don't have to tell anybody that.
That's true, but minor take. Oh, by the way, here. For those who are not sure, this is a 2016 Saxum Paderewski, and it's really good, but I will admit that the oak treatment's a bit stronger than I would like, and I think 2 more years in bottle of would be good. So, do you qualify for the loan? Number one, you have to be a business concern or a 501c3, 3 being the magic number there. I had a conversation with the executive director of the Trade Association for Banks, for community banks in New York. He's getting killed economically because they can't have any conventions. They can't do any of the things that generally are their money makers. But he's not a 501c3, he's a 501c6, and he's probably not going to comply. You can't have more than 500 employees unless you're a hotel, when it's 500 employees per location. So if you work for IBM or something like that, you can sign off and give your space to somebody else. Number 3, you must be suffering financial hardship from COVID-19. And by the way, for those who think that COVID stands for China originated virus, the answer is no, it doesn't. Okay, I just want to mention that because sometimes I forget what idiocy I get on Berserkers and what idiocy I get on Facebook. Now, it doesn't say, there is nothing that says how much financial hardship. There is nothing so far that says, until yesterday, that the loan has to be necessary for your survival. As one of my bank presidents pointed out to me while yelling at me at 1 o'clock this afternoon, yesterday's Treasury guidance did say necessary for your survival. Whether that will turn out to be included in the final rules is unknown. A minute about final rules. The Small Business Administration has to issue rules before this can happen. If you believe the politicians in Washington, the rules will be issued tomorrow because, Treasury has promised that banks will take applications on Friday, and the banks aren't taking applications until the regs are issued. Except for 2 of our clients that I've convinced that's a silly approach. Take the application and explain to people that it's subject to the regs. And they're gearing up. They may take them tomorrow, but that's the issue. And whether or not you must be suffering financial hardship how much hardship you have to be suffering is unclear. So how much do you get? You get 2.5 times average monthly payroll costs. Average during what period? Well, the statute says one thing, the guidance yesterday says another. The statute says 12 trailing months ending on the closing date, which is kind of stupid because that means that, as Asher will tell you, I do use that term a lot. you can't very well prepare loan documents if you don't know how much the loan is going to be until the day of the closing. But it appears that Treasury has in their guidance yesterday, they're talking about 2019. Whether or not that's because they decided consciously to ignore the statute because it's unworkable, or whether they haven't gotten the nuances yet, we don't know. They do talk about tax returns, but they sort of forgot that everyone is on extension, and e-business tax returns. Anybody who's on extension doesn't have to file until I think July 15th. That causes a little problem. They kind of forgot that. It's one of the things we talked to the lobbyists about today. They're going to remind Treasury tomorrow. What are payroll costs? In other words, you're gonna create an equation which is going to be X plus Y plus Z. It's actually A, B, C, D, E, F, and G. Oh, here, I even lettered it that way. That's the way it is in the statute. For the year divided by 12 times 2.5. That's how much you can borrow. So payroll costs are a little bit broader than salary. 1099s and guaranteed payments I'm not going to talk about because that's mostly peculiar to partnership law firms. It's the obvious stuff like salary, wages, and commissions, but you have to add to that retirement benefits, health insurance costs, tips in a manner that's not clear in the statute, and we've heard that the regs are going to be limited because tips are a little peculiar. I, as a business, am getting a benefit from the government for what? For tips that my customers paid to my wait staff. There are two ways of arguing that as being a good idea or a bad idea, but we're still waiting for Treasury advice. If anyone out there is in the food service business, don't take it to the bank yet. We'll know in the next couple days. If you fired anybody, their severance pay gets included. Fired anybody during the period, retirement benefits, and I don't know what the story is in California in terms of state and local wage withholding taxes. In New York, there are a couple. There's state unemployment, municipal unemployment, a couple of other minor things. Federal withholding, FICA, FUTA, for reasons that maybe I can figure out, but I'm only guessing. Those are not included. But yeah, here's what you have to take away. You have to deduct when you're calculating payroll costs before the multiplier, not after the multiplier. That'll cause you a real problem. Any compensation that is paid to an individual in excess of an annual salary of $100,000. So Todd's going to have a huge deduction because he's making zillions of dollars running wine Berserkers and wine check. So you have to subtract that. There is a little there's some quirky language because you have to deduct compensation of an individual whose salary is more than $100,000. Compensation over $100,000 for an individual whose salary is over $100,000. Whether the difference between compensation and salary is deliberate or accidental is impossible to tell at this point, but the statute uses them to mean two different things elsewhere. And again, in terms of the nuances and the niceties, it's hard to say. You have to take away employees whose principal residence is outside the United States. You have to take away certain withholding taxes. That's number 3. We'll ignore it. And if you paid any sick leave or family leave that created a credit under, let's call it coronavirus statute number 2, this is number 3, and you get a tax credit for that, that has to be excluded. But there's not going to be a lot of that. So that's how you figure out how much of a loan you're going to get. Basically, simple example, you have a total salary bill of $700,000. You You have $100,000 worth of wastage for rich people. You're down to $600,000. So that's $50,000 a month. You can borrow $125,000. You may say to me, $125,000 isn't going to move the needle for me. Why should I do it? And the answer, as we will talk in a moment, is because it's free money. It is even better than free money if you're a profit-making organization. It is a gift to you from the government, even though it's a loan, and we'll talk about why in a moment. Okay. The second question is loan terms. And you'll see there's a lot of slashes here, and I'll explain. The left-hand side of the slash is what the statute said. No, actually, that's not always true. I'm sorry. Is the interest rate going to be 4% or 0.5%? The statute says 4. Yesterday, Treasury issued guidance that says it's going to be 0.5% interest rate. We don't know. I don't want to talk about the importance of that to the financial industry. To you, it mostly makes no difference because you're not going to pay the loan back anyway. You're going to get forgiveness in a couple of months. To the banking industry and the willingness of banks to make these loans, that's a very important difference. And it's not the difference between earning 4% and earning 0.5% because they don't give a shit. It's the difference between whether you can sell the loan into a securitization and therefore replenish your liquidity, or whether you're going to have to hold the loan for 4 or 5 months. If it is the latter, the small banks are going to have a real problem with this. Because there's not $347 billion in the banking industry to just give to people and not have it for 4 months. If you give it to people and you don't have it until actually 90 days after June 30th, the end of September, if that happens, the banks are not going to have cash to make other loans. All the banks had figured, okay, we'll make these loans. We'll be the government's dispersing agent. We'll spread the money around. Then we'll take the loans. We'll put them in a package. We'll sell them in a security to Goldman Sachs. We'll get our cash back, and we can make other loans. At 0.5%, there's a serious doubt as to whether they can do that. They can sell it to Treasury or at the discount window, but we don't know yet. You don't have to make any payments on the loan, for 6 to 12 months. The part of the loan that is not forgiven is either payable over 2 years, which is what the guidance said yesterday, or 10 years, which is what the statute says. 2 years for 0.5% makes sense. 10 years for 4% makes sense. God only knows where it's going to come out. The loan is from a bank or an SBA approved lender. It is not a loan from the SBA. Everybody who wants this say, thank God it's not, because when it comes to the EIDL, economic impact disaster loan, I think, it's a loan directly from the SBA. And for those of you who understand it, you will be lucky if you get it for next Tisha B'Av. There's no personal guarantee, which is required in every other SBA loan. And there is no collateral, which is required in every other SBA loan. The loan is 100% SBA guaranteed, which I mentioned. You don't care, but if your question is, well, I'm on the balls of my ass and I am going to lose every nickel that I have, and I'm going to go broke, and this may or may not help me. But if it doesn't help me, the bank's going to hate me and they're not going to take the risk. The answer is that's not a problem. Once they get over the hurdle of actually underwriting the loan and figuring it out, the SBA is guaranteeing 100% of the loan. Costs to you as a borrower, 0. The SBA pays a very hefty fee to the bank. The clients that I've spoken with expect 0. Not only do they expect 0 fees from the bank, but here's your shameless plug. I'm sorry. The custom and practice with SBA loans, is that you give your loan application either to a lawyer, an accountant, or an SBA expert we call packagers, who process these things and put them together in packages. Under this framework, the SBA anticipates that they're going to pay the banks a whole lot of money. The fees to the banks are substantial, and the banks are going to pay the lawyers and the packagers for the borrower, so that the legal fees are going to be, or the packagers' fees to the borrower are going to be zero. That they want to do for obvious reasons. My estimate is that the total amount that the SBA is going to pay to the banks is somewhere between $4.5 and $5 billion. But if you think about it, that's a relatively small fee for being the government's dispersing agent for $347 billion, which is why the whole thing is created in the first place. The government doesn't expect this money back. They're blowing this money out to try to save the economy, and it looks good, like they're going to get it back, but we believe that they know, Congress knows, and everybody knows it's not coming back. So let's talk about forgiveness. Why isn't it coming back? Because the loan is forgiven in a certain amount. Oh, I just noticed something that I left out. There's a reason why I'm doing this today. All right. You're only supposed to use the loan for certain purposes: salary, rent, and the like. Since dollars are not fungible, and the dollars you get from your bank aren't going to have a stamp on it that says, this is a PPP loan dollar, and you're going to have to give it to an employee. We believe, although the Treasury's guidance is a little squirrely on this, that you're going to be able to take the loan, you're going to be able to put it in your operating account, and you're going to be able to spend it on operations, but you had better be able to prove that the amount of money you spent on the permitted items, total net after everything, and dollars are fungible, that the amount of money you spent on those items between the closing of the loan and either 8 weeks after or June 30th, it's not clear to me, but I think it's the longer of, you spent for permissible purposes. Because if you don't do that, that nice little thing I mentioned up here about no personal guarantee, oops. If you get the loan and you buy yourself a Mercedes and you close down your business the next day, you've personally guaranteed the loan. Still a good deal, but that's another story. The forgiveness is based upon how much money you spend for payroll, interest on a mortgage loan that you had in the past, rent on a lease that you had in the past, and utility payments on utilities which you first signed up for in the past. That doesn't mean rent you paid 6 months ago. All it means is you can't sign a lease on March 3rd of 2020 and use the money to pay that rent. But if you signed the lease in 2019, or if you had your utility hookup and service began in 2019, then the payments you make on that transaction for those expenses are going to be subject to forgiveness. Now, it's incurred in the 8 weeks after the loan closes. So think about that for a moment. It's an interesting mathematical relationship. You get 8.5 times salary, and 2.5 times salary for a month. So let's call that 10 weeks. And then you have 8 weeks to disperse the money. You might say, well, I can't spend that much money in 20% fewer weeks. And the answer is yes, you can, because there are things other than salary that you can spend it on. Treasury yesterday, or at some point in the past week, Treasury, the bulb went off and said, oh, wait a minute. The way the statute is written, you can borrow money based on salary, but you don't have to spend it on salary. And their guidance says, and indicates that the new rule is going to say that 75% of the money has to be spent on wages and related costs. How that's going to come out, because there are very fine nuances, is unknown. Nobody thought that was going to happen. It just got announced yesterday. But if you're playing it straight, and you have a normal mix of expenses, it's not going to be material. I happen to be on the board of a foundation that's going to have a problem with that rule. It teaches chess in schools, and pretty much we have $1,400 a month in rent and $700,000 in salary and health insurance expense, and we buy a couple trophies for the kids when they win chess tournaments. That's it. So we may have a problem spending all of it, but that's okay if you think about it. First of all, you're paying interest on at 0.5%, and if you don't spend it on forgivable expenses, you just pay the loan back.
Jay, can I ask a question about forgiveness?
Yeah.
Normally, my question concerns the following. How do we know that the IRS isn't going to turn around and say that whatever amount of the loan...
Because the statute says so. I'll get to that. You see, only my partner is allowed to ask questions that like that, because he hasn't seen the PowerPoint yet. The answer is, you're talking about reduction of indebtedness income.
Exactly.
Yeah, and the statute says no. I'll explain that to everybody in a minute. That's why it's better than free. Asher just asked the question as to why with the answer to which is, this is why I said it's better than free money. The only thing that can't be forgiven is interest on the loan. At 4%, it's not significant because of the free money principle. But at 0.5%, it's a joke. The fact that you're paying the interest. Also, it's not clear because you don't have to make any payments for at least 6 months. It's 6 to 12, depending on the way the statute is worded. But if you don't make the payments for 6 months and then it's all forgiven, what does that mean about the interest? And we haven't figured that out yet. I don't know that they have either. Now, your forgiveness can be reduced. How does it get reduced? Bottom line, because it's really complicated with all the ins and outs. First of all, if you fire people and your employee complement goes down, you are losing some of your forgiveness on a pro rata basis. You had 100 employees during the measuring period. You have 90 employees at the end. You only get 90% of your forgiveness. Reduction in salary is much more punitive. You reduce the salary of anybody who is under 100,000 by more than 25%. You lose dollar for dollar reduction in the amount of forgiveness. Now, this is actually interesting for those who think that this is a 1% rich people plot, which it is, but for other reasons. If you have 2 employees, one of whom is getting $95,000 and the other of whom salary is $200,000, if you reduce the person who's getting a $95,000 salary down to, I'm sorry, I should down to, what does it come to? 72,500, less than 72,500. You lose forgiveness dollar for dollar for every salary a dollar of salary reduction you imposed on them. However, if you have somebody whose salary is 200,000 and you reduce it to $5, pay attention to this, Asher. And you reduce it to $5, no reduction at all. It's not, you don't reduce them down to 100,000 and then anything further than that counts against the 25% rule. It's not written that way. The Treasury may change it when they issue the official rules, but as it stands now, I think my wife is the one who really caught this. Because her salary was a little over 100,000, yeah, that's what happens when you work for legal aid. She could have had her salary reduced to $5 and there was nothing. But if it was a new lawyer just out of law school whose salary started at under 100,000 at legal aid, they could only be reduced 25%. It sounds silly, but when you're doing your calculations here, be careful about that, and you can game the system with it. I'm not going to go into the details of the calculations because they are the most painful, in my view, component to this. There is a rehire rule where if you fire, forget about fire, because let us suppose the worst case scenario, which is where my partner and I have had violent disagreements. Let us suppose that somebody who is your employee dies of coronavirus. You can't rehire them. Let's suppose they quit because they get a better job. You can't rehire them. So does the rehire rule require that you hire the same person? The answer is no. It doesn't, so long as they don't butcher that principle when the regs are completed. You don't have to rehire the same person. Now, here are some miscellaneous items that are important. Number one is the question that Asher asked earlier. In case you don't know this, if you have a debt and you owe a debt and the debt is canceled and you don't repay it, then except for certain bankruptcy situations where you prove that you're insolvent, the fact that somebody forgave a debt to you is income. It's called reduction of indebtedness income. If you think about it, you got the money, you didn't pay it back. It's got to go somewhere, and the IRS isn't going to allow you to keep it. So it's the same as income. If it weren't, believe me, we lawyers could abuse the shit out of that one. But there is a specific provision in this statute that does not apply. So now let's talk about, just briefly, about the economics of this. I borrow $100,000. I use it to pay salaries, let's say entirely to salaries, and then the government forgives the debt, and the SBA pays the bank, and I don't have to pay it back. Not only did I get $100,000, which I then got to use to keep my business open, but I have $100,000 of tax deductible expense on my tax return. So if I have taxable income, it offsets that. And that $100,000, depending upon your particular tax circumstances, are you an S corp, are you a this, are you a that, there's all sorts of combinations, is worth an additional $25,000 to $40,000, $25,000 to $35,000 to you. And because of the Make Everybody Rich by Giving Tax Benefits to the Rich Act of 2017, if you can't use up the entire value of that deduction in the first year because you didn't have any taxable income because you just barely scraped by, then you can roll that forward and you can keep, that's called a tax loss. You get what's called a tax loss carry forward. I don't even remember anymore how long they changed it to. It's like 10 years. So if you survive, if your business survives and 4 years later you're finally making money again, I got a $100,000 deduction left over from the excess salaries I paid in 2020, and it gives you benefit. That's why it's better than free money. Not only do you not have to pay it back, but they gave you money for tax deductible expenses that's going to give you a separate benefit. There are special rules for tipped employees. There's a difference between measuring it on the way in, measuring it on the way out in terms of forgiveness. It's included as part of your loan amount. It is excluded on the forgiveness rule. Why? That one I haven't figured out yet. We got to wait to see what the rules say. Who can borrow the money? Who can lend the money? Any SBA approved lender. There's 500 of them. There's also supposed to be an accelerated approval process for that seems to be any other FDIC insured bank, but how quickly they will be able to get approved is hard to say, and whether they're going to bother is unknown to us. We have lender clients who are SBA approved, who are small business lenders, who are willing to make these loans. When the deal terms changed, I called the president of one of these banks at about 1 o'clock today. And after he was finished yelling at me about yesterday's guidance, and I calmed it down and said, so you're going to make the loans? He goes, yeah, of course we're going to make the loans. It's just not as good. So there are people who will make these loans. On the permitted use of the loan, dollars are fungible. Like I said, you're not going to have a little stamp on your loan dollar that says this was a PPP dollar. You got to spend it for these items. The biggest thing on the forgiveness is in the documentation side is that's where there's a paper burden for you. We think that the paper burden on the way in to get the loan is going to be negligible. The banks are on your side on that. All of the lobbyists are beating the crap out of the SBA and the Treasury Department to make the documentation as simple as possible, because screwing up the approval of the documentation is the only real way the banks can get into trouble on this. But on the way out, you're going to have to be able to very carefully document every cent you spend, and you're going to have to submit your payroll tax filings to the IRS. So if you're paying the local illegal to work in your kitchen, and you're not, you can prove that you paid him the wages, but you're not including them on your what's it called, 990? I forget. Your payroll tax filings with the IRS, you're not going to get forgiveness for those dollars. So you got to be careful, be meticulous, keep the records. As I said, the final regulations, which are now due tomorrow or the day after, may change everything. There is a draft application that is available. It's on the website. There's a link to it on some silly thread in that Berserkers thing. And that's it for me. Todd can now unmute everybody, and you can ask me all
well,
those.
I don't want to unmute. No, because that's going to make a mess. Then you're going to get dogs and all kinds of stuff. So
we're not going to do that.
So the questions have been posted in the chat, and if we open up, everyone, if you haven't yet opened up your chat, just click it at the bottom of your screen and type questions in there. The first one, actually, Jay, in there is from me. Do owner draws
why don't you
count?
ask it? Because I am not allowed to have chat.
You're not allowed to have
sure
chat
it's
on your
here,
computer?
But no, I had the same problem when I was testing yesterday on something else. The chat button is not in my in the bar. That's so strange. Why don't you just ask it?
All right, I'll read them off to you. Do owner draws count as salary, wage, or similar compensation?
Probably. It depends upon the nature of the business entity, but we believe.
I can tell you, it's an LLC.
It's an LLC, and it's an owner, and it's a draw, and it's taxed as a partnership.
Well, it's taxed as a LLC, and
it's
usually
taxed as a corporate.
That's passed through.
Is it a single member LLC?
Two members. So it's taxed as a partnership.
Yeah. The answer is we believe that it is. It depends upon how it's classified. If your 1120 says guaranteed payment to partner, or your K1 says that, then under the Internal Revenue Code, we believe the answer to that is yes. If it is a pure member distribution, the answer to that is it's not as clear as we would like. There are some rules about reasonable compensation versus outrageous profit. You can't pay something as reasonable compensation when it's actually above the line dividend, but on a pass-through. That's one of the biggest issues that the users are asking of Treasury to clarify. The accountants mainly. The accountants are very heavily pushing on getting a clarification on those issues. They believe that the answer is going to be yes, but it's not clear.
Okay. It's a pending question, I guess, a pending answer.
Yeah, it is a pending answer, and believe me, Escher and I want to know the answer, and we'll just leave it at that.
Okay. Nathan V. I own a restaurant that was closed by the state of North Carolina, furloughed all employees. When I applied, they asked about gross revenue and cost of goods sold, but not about payroll. This was under the SBA COVID-19, the same one we talked about, the EIDL one, the Economic Injury Disaster Loan Application.
Yeah, well, that application is totally different. It's a totally different loan program. It is a direct, ooh, my wife is stealing some Saxum, so I have to get some more before I lose it all. I'm just kidding. We have plenty more downstairs where this came from. The EIDL program is completely different. It's direct loans from the SBA, and the qualifications to get it are completely different. When did you file for that loan?
Let me get Nathan, see if I can get him on.
Can you get him on?
Here, actually, turn off your presentation. That would help, because then I can see everybody.
Oh, okay. Yeah, I don't need.
Yeah, stop sharing your screen, and then I can do it.
Okay, new share. Why did I do this? No. Oh, you want me to stop sharing? How do I do
Stop sharing
that?
screen.
Oh, there, I push the button that says stop share. Oh, what a novel.
There you go. Got it. Okay.
Ah,
so
look.
Now,
oh, there's those people. Look at that.
So anyone who wants to see it, if you click gallery view, you can see everybody. Now I'm going to unmute you, Nathan, if you want to ask further. Are you still on, Nathan? He doesn't have video, but here we go.
Nathan?
Yeah, I'm here. Sorry, this is from my computer. Is my audio okay?
Yeah, yes. It's fine.
Okay, so I applied for that disaster relief loan. Is that the wrong loan to apply for?
It's not wrong. It's just different. And it may be useless.
Right.
We've been arguing this since yesterday as to how much time in our presentation tomorrow we're going to do discussing this. I lost the argument, so they're going to spend more time. The problem with the EIDL loan is it takes forever. It's a direct loan from the SBA. Everybody and his grandmother is applying for it. They don't have the staff to process it. And the reason why the other loan exists is because they know that if the SBA had to process $347 billion worth of EIDL loans, I'd be dead. Half the people in this room will be dead before the SBA got around to it. That doesn't mean it's a bad loan. It doesn't mean you shouldn't apply for it, particularly if $10,000 moves the needle for you. In theory, and we won't know until probably tomorrow, in theory, within 3 days after the application for an EIDL loan, you're supposed to get a $10,000 grant. And if that's important to you, if that moves the needle for you, if you need $10,000 really fast, then it's important to apply for it. If you really don't care about that, my view is it's probably going to be irrelevant. And the reason it's going to be irrelevant is that the law provides that you can take the EIDL loan and fold it into this other loan. It's called a PPP, Payroll Protection Program. You can fold the EIDL loan into the PPP loan so that you don't have to end up repaying it. But the problem with that is that the timing doesn't work. It's delusional because you're going to get the PPP loan before you get the EIDL loan, which means you're just going to be able to use the PPP. We think you're going to be able to use the PPP loan to repay the EIDL there's some timing problems that don't work. Hopefully that's going to be explained. Doesn't mean you made a mistake. It's just that you really don't want to keep it if you can avoid it. You should definitely apply for this loan because it's still free money. Worst case scenario, it's free money.
Right.
Okay.
So Jay, we've got like 12 more questions. So
Yeah, now I have chat.
try to. Oh, you do. Oh, good. So the next one is from Greg. If you can see that one, that was at 5:13.
513. Oh, you mean he couldn't help himself? He is. We're gonna give this a name like premature what?
No, Greg says, what about pending severance that is scheduled to occur shortly? I'm going to unmute him.
You mean
Greg.
someone's about to get fired?
Yeah.
I'm sorry. I was going to say, which side do you want me to represent? Seriously, there's a lot of dynamics. If you fire somebody tomorrow, if you fire anybody between now, you being an employer, fires anybody between now and the 20, whatever it is, 30 days after last Friday, then you can catch up and negate the adverse effects of that firing so long as you rehire by June 30th.
Oh.
So, and it's kind of a freebie. They haven't quite written it yet. This is another one in terms of gaming the system. You fire 6 people today. On June 29th, you hire 6 people. On July 4th, you fire 6 people again. You know, I got to assume that they're going to write, and that's so obvious that they will write the rule to stop you from doing that. But they want the they want to kickstart the economy. Now, the fact that they're deluding themselves into believing that we're all going to be wonderful after June 30th is a political pipe dream, but it has nothing to do with the business components of this. If you fire somebody and you rehire an equal number of people on June 29th, you should be okay, subject to the rules, and something's going to happen with respect to, you can't then turn around and fire them. And what it pretty much means is until you know whether you're going to get this loan, you can conduct your business in the ordinary course.
Okay. Do small businesses who've been funded by venture capital qualify?
Availability of funds, I'm sorry, nature of ownership is irrelevant. Source of funds is irrelevant. If the business can establish that they're suffering financial hardship as a result of this, where the money came from is to start the business is irrelevant. You know, if you have 6 venture capitalists who, let's see, they wanted to buy Screaming Eagle, and they bought Screaming Eagle because they had more money than they knew what to do with, and now they fire 4 out of the 5 people who fly the helicopter. You like that, huh?
Nice one. Good pull.
Then it doesn't matter. The fact that it's owned by a bunch of rich guys doesn't matter. Who is it owned by? Larry is Ellison on that? I don't remember. Somebody like that.
I don't care.
But I don't either. But no, the ownership is irrelevant.
Okay, we have, does the union dues that cover pension, healthcare, and fringe benefits factor into the computation? I have payroll and payroll taxes in the computation so far. And I'll unmute you, Bones Slammy.
Yeah, the answer is I got to look that up. There is a rule regarding union dues. Wait a minute, but union dues paid by the union contributions to a pension plan paid by the employer, or union dues paid by an employee?
You're muted, Bones Slammy, for some reason. Yeah, you have your set on mute, yeah.
Hello?
Try again.
The question is, Are we talking about union dues paid by employees, or are we talking about pension plan contributions made by an employer to a union pension plan?
Trying to unmute you. Now try. Nothing.
No. Okay, here's what we're going to do. We're going to give you two choices, and you're going to raise your hand at the right choice.
There you go.
Number one, you got it?
I think he's going to type it in or something.
He doesn't look
Then I
like a
can't see one.
boomer either.
No. All right, type it in, Bone Slamming. All right, he says employer. It's
Paid by the employer,
paid.
yes. I believe that the way the statute is worded, an employer contribution to a union, what are they called? Joint pension. There's a term for it, which escapes me at the moment. A joint employer pension fund, for example, is going to be included because it's a payment for health benefits.
Does that answer? Okay. Any rules of affiliates? Dan Borichter. I'll take him off mute. Okay. Dan, you're off mute.
The answer is these guys. They did not. This is really the scary part. I'm not going to even talk about this to the lawyers because Congress screwed up big time in the affiliates language and the way they brought in the 34 Act definition of issuer. Sorry, I don't know I don't know the background of the guy who asked the question, but
it's Dan Borichter. He's unmuted. Dan, you can talk.
Yeah, I just had questions about that because we have affiliated entities that we're paying rent to and concerned about that, and other people that have common owners of various couple of companies, and can each of them apply? So that's really the question.
It's two entirely different questions. I'm not sure the answer because I threw up my hands when I read there are definitions in statute regarding affiliates, and when you back out and you look at the Securities Exchange Act meanings of the terms that are referenced there, it makes no sense. But I believe that the answer is, that you can include affiliate expenses in your application. And there's something quirky about, I got to check this for tomorrow because someone else is going to ask it. I think you can make separate applications for affiliates, which is a silly answer, but the affiliate rule, these are called 7A loans. For those of you who are familiar with SBA loans, there's principally two kinds. There's 7A and 504. These are 7A loans, and they've repealed the affiliate rule, but I haven't traced it all the way through what the consequences of that are. I think they may be able to make separate loans, but I'd have to look it up.
Okay.
I want to know what kind of artwork Roby has behind him.
Oh, let's not go there. No. Let's not go to the personal backgrounds. That's a very
no. I just would no. The reason I did
Oh.
that was because I have this behind me.
It's not a virtual. Okay, good.
No. I have this behind me, which was done by the father of a berserker. But never mind. Let's go on. Yes.
Oh, okay.
Patrick,
right,
Stella.
Oh yeah, Stella. Anton Dotson. For an employer earns over $100,000, can I include that person's salary up to $100,000 in the loan? And
yes.
That is Anton,
yes,
and I'll try to unmute
yes,
him
it's only that which is over the limit. And literally speaking, I believe that you can also include that your contribution to that person's health insurance and pension plan. And one of the issues we've raised with the SBA, because it's a potential for abuse, is if you're an older, highly compensated employee, do you have the right? I mean, can you abuse the system by paying a large catch-up contribution, as let's say a 401k match, for somebody who's a highly compensated employee? We don't know the answer to that question, but we believe that the health insurance benefits and retirement benefits, even if your salary is more than $100,000, may be includable.
Okay. So one that's similar to the first question, the owner draw and salary cannot exceed 100K. Isn't that, I think you just said it can only be up to 100, and beyond that you can't calculate it, right?
Yeah, you can't use that in calculating loan amounts.
Okay. If an employee makes 150K plus 5K in benefits, is the amount included in the calculation capped at 100? Okay, we keep seeing the same question.
I believe,
over and over.
yeah. I believe we need guidance on that. That's the whole issue of whether they use the words compensation and salary deliberately to differentiate between two concepts throughout the statute, or whether they used it randomly, sometimes meaning two different things and sometimes meaning the same thing. This is where my comment, I think at the very beginning, where I said, or maybe I didn't say it here, was that my respect for the congressional drafting process has actually gone up, not down, because I'm assuming that they did this stuff on purpose. And if they did this stuff on purpose, it was really sophisticated. But I don't know yet whether they actually did it on purpose or whether they just sort of forgot they used the word salary and used the word compensation as a synonym later on. Ooh, look,
I personally hope so on that.
Yeah, well, so does everybody else. Thank you very much, as he raises his hand.
Yeah, so you'll be looking for that kind of other kind of compensation too.
Oh
yeah,
so, that one's not lost on anybody. I got 1,000 people in the meeting tomorrow, and they're all lawyers, and I would say that about 985 of them are going to care.
Wow. Okay. The next question.
They're New York lawyers. What do you think their compensation is?
Well, I'm not talking about just 100K minimum. I'm just talking about if other things, other manners of compensation other than just standard salary will work, like draws and such. Yeah.
Their salaries are going to be more than 100K.
Yeah.
Not all of them, maybe.
But the
people who are signing on, their salaries are going to be more than 100K because they're going to be the employers, and they're going to want to know about health insurance. And I'm going to say, yeah, we think so, but we got to wait till tomorrow.
Okay. I think you already answered this. Can an economic impact disaster loan be refinanced into this loan program? What are the potential pitfalls? I think you said you can use the PPP to pay the EIDL if you get the EIDL, but you're probably not going to get the EIDL.
You're not going to get the EIDL until too late. I believe. Treasury doesn't say so. They do this speech. In every disaster, the statute is written to allow you to roll the EIDL into the PPP loan. I don't think it's going to happen as a practical matter. The only but as I said, if there are two reasons to apply for the EIDL loan. One is because $10,000 is important to you in the survival of your business. You're supposed to get it within 3 days after application. I haven't heard from anybody who got it yet, but it's unclear whether the 3 days started on Friday or Monday. The other reason to apply for it is if I'm wrong, which does happen on once a decade, if I'm wrong and the EIDL loans are made faster than the PPP loans, then you'll have the cash and you just roll it in, because the amount of the loan that you can borrow is equal to 2.5 times with some adjustment, may even be a full add into the EIDL. I don't think it's going to happen, so I really haven't looked into it, but it's designed so that you can roll one into the other.
Are there pitfalls? That was the last part of his question or her question.
There's a couple of technical things that you give up in either of these loan programs. There are other benefits, but it's very company specific. It depends upon what state you're in and what state withholding you have. It's an issue that you have to raise with your accountant, because there are certain circumstances in which you're entitled to a credit under other sections of the law, but you're not entitled to the credit. Excuse me, you're not entitled to the credit if you take this kind of loan. That's I have concluded, and I believe that in most cases that's not an issue. This is better, but I've gotten a couple of people who have posed various, boogeyman in the closet hypotheticals where the other alternative may be better.
Okay. All right, and then the next question is, for tipped employees, we put them on a biweekly payroll about halfway during the period needed to be reported for the loan. Will we get any forgivable loan money to pay these employees? That is Nathan V, and I'll see if I can put him on. Where is he?
Yeah, because that's
I don't
not
see
clear.
him. I think he's off. Is he off?
No, I'm here. Yeah,
Oh, there you are.
I already got a question, so I don't want to take up any more
No.
time. Other people have questions, and you said that tipped employees, we don't know yet.
Well, but you said you put him on salary. Do I get to include him?
No, I'm sorry.
You
we
mean,
didn't put him on salary? We collected the tips and we disperse it with our payroll checks for our salaried employees.
so you're talking about in calculating your loan amount or in calculating your forgiveness?
Well, forgiveness, because will tipped employees be part of the forgiveness part of the PPP?
Only to the extent that you pay them additional salary over tips. That's what the statute says.
Okay.
This is the quirky thing. On the way in, you include tips as part of your payroll costs. On the way out, the amount of the forgiveness is based only upon wages paid in addition. I think they specifically use the word additional to the tips. I don't understand why they made that distinction. I'm not a Fair Labor Standards Act expert. There may be some logic to it that I haven't figured out yet. On the other hand, it may just be a mistake, and they'll clarify it in the rules.
Yeah, we pay payroll tax on their tip.
You pay payroll tax on their tip. Well, on the way in, I think you definitely get it. On the way out, it appears literally that you get screwed because you can't count it. But as I said, I'm not an FLSA expert, and I'm still waiting for a response from my partner on that question, which I raised 3 days ago. So we're hoping to get a precise answer from Treasury when they issue the regs tomorrow or Friday. Hopefully, we're all praying that they're going to get around to it.
All right.
Okay, we've got another dozen here, so
yeah, we'll just sit here. I'm almost
you're
ready
running
to
out
go.
of wine, Jay.
Yeah, sure. Wait a minute.
Just that bottle, I mean. Just that bottle.
Okay.
I know.
You want me to turn it around and show you the Cineplex bottle collection? Go ahead. I'm sorry.
All right. Forgivable expenses include payroll, rent, and utilities. The application only seems to allow for payroll in calculating the loan amount. Does payroll indeed determine the maximum loan amount?
Yes. Not payroll.
Good.
Payroll costs, which is salaries and all those other things. It's only wages that determines loan amount.
Okay. The current draft application asks for number of jobs. What do they mean? Full and part-time? Is there updated form for S-Corps yet to be released?
The answer is, I did not drill through the instructions on that, but according to the statute, it's on the way in, which is what the application is, it's full and part-time. On the way out, I think it's FTEs because it's too easy to game the system. If it's total head count on the way out, I mean, in terms of calculating forgiveness, but on the way in, I believe it's no. For calculating loan amount, it's full and part-time. I believe that it's FTEs for for calculating where your head count is, but I'm not sure on the application because it's a draft and we're not taking it overly seriously except to find the mistakes in it.
Okay. Do you have any idea what lenders are doing about these loans and existing lines of credit with covenants?
Yeah. Every lender that I know is looking hard at lines of credit and asking whether they want to get deeper into debt with a guy who says he can't pay his loan back. It's individualized, but I have had a number of lenders who have shut down lines of credit. Please note, it's not so simple when it comes to home equity lines of credit, because there are rules under the Truth in Lending Act and was Federal Reserve Regulation Z is now CFPB Regulation 1026, regarding your ability to clamp down on a line of credit on a home equity line of credit. But we believe it is likely that in the loan documents for virtually every line of credit, certainly every one line of credit written by a competent lawyer, you can shut down the line of credit because of financial disaster.
Okay.
I in fact know one who called me, asked me to look at it and shut it down.
Okay. This is a good one. Do landlords qualify if they can prove hardship and use that money for hardship benefits? And I can speak a little on this one because I have tenants that have told me they can't pay for the foreseeable future. And the bank has separate programs that help you out and allow you to furlough your mortgage, to furlough the mortgage. So, oh, you weren't even listening, Jay, huh?
No, my wife was advising that since everyone on this call-in TV show or whatever you want to call it drinks wine, on the day you can't go like this and smell it, that's when you call your doctor right away.
That's true, right? Yeah.
Because
now we're getting into COVID-19.
Right. Because which we're only moderately sensitive about, because my nephew's wife is 8.5 months pregnant, and we got my other nephew's sister-in-law has it, and we got some I shouldn't say this, contraband N95 masks, which I drove into Manhattan and threw out the window at my nephew as I drove past his apartment building. So yes, we smell things every evening to make sure
just
that
to check. That's a good check. Okay, so did you hear the question? It was
the question had to do with
landlords. Do landlords qualify if they can prove hardship and use the money for mortgage payments? And what I mentioned is that the banks have their own program now for mortgages that allow for furlough of 3 months at the moment. So and then you work on it on the other side. But is there something specific in this PPP program?
Yeah. Okay. Here's the problem. You start with the idea that the amount of the loan you make is based upon a multiple of salaries paid.
Yeah.
And therefore, in most cases, your multiple is going to be a small number when you're a passive single asset real estate lender, real estate investor. The forbearance is it's not complicated, but a lot of the forbearances that are being granted by banks have nothing to do with statutory requirements, executive orders in New York, or anything like that. I've written that up 5 times. I've written up all sorts of analysis on that. And the truth is, number one, most multifamily and related mortgage loans are not, at least in New York and certain states like Minnesota, the custom is to do things which end up getting government guarantees and bringing them. Most commercial mortgage loans are not subject to the fair forbearance requirements because they are not government guaranteed, or they're not Fannie Mae or FHA
Yeah,
has some
FHA,
multifamily
yeah.
programs. If you're not in one of those, you are not, so you're not subject to mandatory forbearance. But, and this is going to shock the hell out of you. I want to see what Roby says because I know he's a banker, right? You're
I'll
a
unmute him.
banker, right? Go like this. Okay. Despite what everybody said in 2008, the banks are not stupid, and they do not want loans in default, and they do not want to own your property. In 43 years of doing this, I have never had a bank that wanted to default somebody because the bank wanted to own the property. Once, and only once, I had a guy where the president of the bank called me and he wanted to default and foreclose somebody because his friend wanted the property. And I said, don't you dare. I said, don't you dare. And he didn't. It's just, you have no idea what the level of aggravation is associated with a non-performing loan. It's just inconceivable. No banks beg, plead with regulators to avoid defaulting people on loans. There are special rules in this statute that avoid, number one, there's a category called troubled debt restructuring, which is when you restructure debt because of the financial hardship to your borrower, and you have to classify it specially and everything happens. No, the statute says no, it's not a TDR. We don't give a shit what FASB says. By the way, FASB conceded on the issue about a week and a half ago. It is not a loan in default. You don't have to report it as 90 days past due. They don't want it. As a result, the thing to learn in this area is it doesn't, in my opinion, and I've been dealing with this since the beginning. This is like my practice for the last 2.5 weeks, is it doesn't matter whether there is a statutory forbearance or not. If you have a loan and you are having trouble and you can identify why you're having trouble, you go to your bank and ask them for a forbearance because they're going to give it to you. Whether they give you everything you need, maybe not. But a bank that says to you, I just wrote up forbearance applications on 4 different packages of commercial mortgage loans. I have 15 residential units, and up above and on the ground floor, I have 2 commercial units. One of them is a pizza parlor, and the other is a hair salon. The pizza parlor can only do delivery, and it's really not a big part of their business. And the hair salon is completely shut down by governor's order, going back an extra 2 weeks before everybody else got shut down. So please give me a forbearance. He's got another property because you have to understand, in Manhattan, this is a standard mixed-use property. Ground floor commercial, residential up above, and in Midtown Manhattan, ground floor commercial means a restaurant because people in New York City don't know how to cook. They have kitchens that are the size of your bathroom. You think I'm joking? I'm not even slightly joking. You can only get 2 people in my
You're derailing, Jay. You're derailing. We got another 10 questions here.
So no, I'm sorry.
I need to moderate you.
That's okay.
All right. So you're on this particular one. You're saying
the answer is
ask
for it.
Forbearance.
The bottom line on the forbearance is it doesn't matter what the rule says. Go to your banker and ask for it. Go ahead.
Okay. What lenders will be ready the soonest to move forward with the PPP? I have the form filled out and ready to roll, says Marty Kubicki. Is it preferable to go to one that you think is going to respond the fastest, or he's not on, so I don't think
No. But it's an important question, and I'll tell you the answer that I was told today by some bankers, and that is that the big guys, they were specifically talking about J.P. Morgan Chase, and they thought that Wells was in the same group. They are only doing these loans for existing customers. I don't know if that's going to be true, but the word that's going out in the banking industry is that that's not the case. I'm sorry, that that's the case. That if they are not a customer, if you're not a customer, they're not really so thrilled about doing this loan because of the 4% versus a 0.5% change in the rate. Once the regulations are finalized, I don't think it's going to make a whole lot of difference. I mean, I represent a small bank in Manhattan that's probably smaller than most. It's certainly smaller than most Chase branches in Manhattan. The entire bank is smaller than most Chase branches in Manhattan, and they are dying to get these. And they're gonna. They've had their IT people have been working for over a week just setting up an online application form so that as soon as they know what the deal is, they're going to make changes and bingo, they're going to blow out the money as fast as they can. My recommendation, therefore, is go to your banker and ask them if they're going to consider these loans. And if not, send me an email. I'll give you names.
Okay. Rick Bolig, I'll unmute you too, but you've had some questions about owner draws. If these are distribution from an LLC, I think they're not salary and comp, but that's similar to what I asked. It's basically taking part of your owner's equity from the business, not much different from taking money from a savings account. This wouldn't count for loan purpose. Is that what you think too? If that's your only form of compensation as an owner, if you don't take a salary, you take only a distribution or a draw?
No, not necessarily. It depends upon whether it's a single owner or a multiple owner LLC. Are you really taking back equity? If you have zero equity in the company and you made money and you took it out, I believe that the tax law includes. I believe that the CARES Act includes some language which allows you to use that in your salary base.
Okay. Rick, did you want to expand on that at all?
Well, I don't know about what the CARES Act said. I just wanted to make sure that somebody didn't misunderstand that if they took a distribution from their LLC, mainly a partnership, which would show on line 19 of a K1, that isn't salary or compensation. So unless the CARES Act says that it can be counted.
What if it's the only compensation that the owners take? If they don't take a salary, if they only take a draw or distribution?
Is it a guarantee? Is it reported on the K1 as a guaranteed payment to partner?
No, if it was a guaranteed payment, it would count.
Yeah, it definitely counts under 707, 701, something like that.
Yeah, I'm just talking about a distribution. It's money that you don't even pay taxes on. It's money that's already been taxed in the past.
Oh, it's not a pass-through LLC?
Yes, it is. But any money that you have in your equity account, you've already.
Oh, so you already paid tax on it and you're just taking it out now?
Yeah.
Nice try.
Well, no, that's different. Yeah, that would.
I don't know for sure, but I'm betting that they didn't write it. There's nothing in the statute that rings a bell that leads me to believe you can include that. Yeah,
I was just saying because the term owner's draw has been brought up 2 or 3 times during this presentation.
Yeah, I mean, if you think about it, I am a partner of a partnership. I get a K1. My guaranteed payments to partners, so long as they are for services rendered as opposed to for use of capital, is includable as compensation as though I'm an employee. Whether or not the rest of my K1 is includable is debatable. I thought all along the answer was no. There are a couple of accountants who think the answer may be yes. And I know that they are lobbying in Washington to write the rules so that the answer is yes. Like I said, we're going to have to wait another day or two, but guaranteed payments are definitely included in calculating.
That's correct. And just before I get muted, Jay, I'm the guy that does the cannabis banking that we've talked a couple of times.
Oh, you're the drug banker. Oh, you're the not Mowgli.
Oh, here
what
we
do you
go.
call it? No. I was gonna make a joke about. Oh shit.
Here we go.
What's the
All right,
name
no,
of the?
see,
Never
here we
mind.
go.
Never
Hold on.
mind. Just let's move on, and I'll think
Okay.
about it once we move on.
There you
Go
go.
ahead.
We got, could you do both? Apply for the loan as the landlord, say with a custodian on salary, interesting, and still ask for the bank forbearance. That's Barry
Sure,
Lipton
why
again.
not?
Is he still on? I don't see him on.
The
That's too
answer
bad.
is yes. Asking for forbearance from a bank has nothing to do
Nothing
with
to do with the loan.
the loan, and they may ask you that. One of the arguments we've been fussing back and forth with in my office is whether or not a bank can force you to make an application for a loan as a condition of a forbearance. And the reasonable people could differ on that.
Okay. Now, here's
I gotta
the good
go
part.
watch the football game. What can we? Sorry.
We're done. That's what I was just about to say.
No,
This is the good part. We're actually finished. So, and I'm sure more questions will come, you know, from people watching this or people who have been on it, and then we can put those in the thread too. And we'll know more when they bring the details out. So go watch football. Jay.
Yeah, they can
We wanna
answer
thank
it.
you.
What football game? Come on, that was a
Yeah,
joke.
exactly.
I
I
gotta
it's a
open
joke.
another bottle of Saxum.
I'm gonna unmute everybody so we can all thank you verbally here. So
Have fun, everybody.
unmute all. So, you know, Jay, thank you so much. This is unbelievable to have someone like you on board to help us out.
I
with this
want to know.
stuff.
I really want to know about Roby's artwork.
All right, he put it in the chat if you can see it, but he can talk.
What?
Hopefully, he can talk now.
David Brothers right here. I'm not very good at the Weatherman thing. Robert Randolph and the family band behind me. The Flaming Lips.
What are they?
Concert.
Are they
posters.
concert
posters,
posters?
Jay.
That's what I thought.
Yep.
The only concert, it's really not even a concert, but where is it? Somewhere I have a Hamilton original cast. Oh, there it is. It's on the other side of the room. I don't. My concert posters are things like Bob Dylan, 1965, Long Island Garden. They weren't fancy then.
Todd, thanks for setting this up.
Yeah, no, of course. I'm gonna.
He's
I'm gonna
from
put-
Oklahoma, I might add. Can you we got to make it. We got to change the rules here, because that's like a foreign country to New Yorkers.
Yes, it is. Yeah.
All right, I'm gonna stop the recording so we can have.
Go
this,
ahead.
be
Thank